multiple time frame analysis.
Oh, yeah. Okay. I love this one. All right. Welcome to Inside a Trader's Mind. I'm your host, Kyle, and I am with Sammy again here. And today we are going to talk about multiple time frame analysis. And this is something we talk about and we use every single day in the market.
Every day.
I think it's probably one of the most important aspects of our trading strategy, I think, I would say, because it really it's the one thing that allows me to nail these monster trades like almost perfectly. Because I wouldn't I lose sometimes still, guys. Yes, I am imperfect. But yeah, I mean, really, what I guess what's important is what tools do some people use? What tools do we use? So
yeah, you gotta know what's happening on a higher time frame, number one, because if you know the direction on a daily chart and you're trying to short a 15-minute chart, you probably need to ask yourself, why am I doing this? Right? You're gonna hurt yourself if you're chasing something that's going away from you. Let's say you're a long on the daily and the 4-hour are all lined up and they're ripping, right? You've got indicators showing you this has momentum up to the upside and you're trying to short it. You're it's gonna go against you. It's gonna hurt.
Exactly. You know? It's
that's where you see it. That's where you see the big move, the move. It's like a macro move, right? Or the big picture is happening on the big time frames, right?
I couldn't have said it better myself. It really just allows us to look at for the market maker friends out there, anybody that's listening, it allows us to look at the long-term trend, to establish a bias, because we want to find out, we want to see what kind of trade we're going to take. So using the high time frames, if we find that the bias is long, we're going to look to take a long trade that day. Right. That's the safest bet, and that's the way you're going to make your money. There's no wrong in playing it safe in this market. Because we want to win.
Should play it safe. You should have the highest probability.
Yes, absolutely.
If you're shorting against a high time frame without a reason to, then your probability is really low. You're backwards, right?
Yeah, it severely drops, because I know there's more like you and I do a little more advanced trading where we can where we take trades into the moving averages. But we also know when to cut them off, because there are sometimes under normal circumstances, sometimes on the low time frames, the trade will go up and shoot up super high long, and it will be super overbought, and then it will rocket back down to the moving average and bounce right off again. Most people get in when they're oh, it's going long, I'm just going to buy this, and it just stops them out because it's going short. Wait for that next turnaround, because ultimately, if you're looking at the high time frame, where that trade is going to go. You just got to wait for your next entry. On the low time frames
for the ride on the elevator.
Patience is so key in this in this whole thing. Patience is so key. I can't even tell you. Even if you're waiting on the 5-minute chart, if you've established your bias, long or short, waiting for the right moment is the most important thing.
Critical. And you got to understand too, a top down or a multiple time frame analysis. The thing is, every chart has this thing. So on a daily chart, once that trend starts running, it might move 500 pips.
Right.
On a 15-minute chart, it's probably only going to move 2 or 3 pumps of ADR within a day, 100 pips in a day, but it might only move 20 here, 30 here, and 30 here. It's not going to just go tick, 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 right?
Dude, that is actually, you just said something really important that I want to mention. So ADR, average daily range. All right.
Yeah.
Something that you should absolutely calculate per week on the ADR, because you want to know, if you've hit your average daily range, you're either going to chop for the rest of the day, it's not going to move, or it's going to reverse. Yeah. And you don't want to be in a long trade when it's reversing.
Yeah, don't long into a long that's already overbought. Don't short into a short that's already oversold.
Average daily range, guys, definitely, if you don't know what that is, look it up, learn how to calculate it, or reach out to me and I will tell you how to do it, because it's going to be something super important that's going to go along with your multiple time frame analysis, because sometimes you're going to see Tokyo just take the whole day. And Tokyo's going to run all the pips up. Yeah. London's going to pull it back down, and New York's not going to do shit.
So. Yep, exactly. And you'll know You know,
you will know. Yeah, you will know.
Absolutely. The thing I think like the biggest part of multiple time frame analysis, though, seriously, is it keeps you safe on smaller time frames, right?
Yes.
And it allows you to take advantage of, let's just say you have daily candles that are moving like, 300-400 pips over a few weeks, right? But now as you squeeze down into the time frames, you can take advantage of the efficiency on a lower time frames.
Oh,
So all you got to
absolutely.
do, right? It's all about efficiency because nobody wants, you're going to freaking sit there and stare at daily candles ticking away. And then people get really upset, especially retail traders that need to make money.
Right.
You
Yeah.
get really upset on a high time frame because you're always getting pullbacks into the next candles, right? You're always getting this, like, candles don't just run stack on top of each other. They pull back. So you can be up. This is what's key on a high time frame. You could be up 80 pips.
Oh my God,
The
how many
next
times that
bar,
fucked me?
the next bar will pull back and you're only up 30 pips all of a sudden and your head explodes because you're
Yeah, and
like,
you're like,
oh,
I gotta close this right now. But sometimes if you
right.
just because
But
if you yeah,
that's the thing, right? You're in the trend on the long time frame. If
yeah,
you're in the short time frame, that 80 pips and that pullback before it runs again is your entry on a short time frame, like a 15-minute candle.
absolutely.
You know?
Actually, can give another pretty good example of that. So let's take actually, for example, let's take US 30. Okay, US 30 moves a
Yeah.
lot of pips. If you find a trade where you can take it where the high time frames are telling you, say it's going to go long, right? You can
Right.
take multiple trades during that day on the low time frames on US 30 because it will come back up, it will hit the 50 moving average on like the 1 minute or the 5 minute chart, and then it will do the same thing. It will just bounce
Yeah.
over and over again. And you can take those long trades because you know ultimately the price is going to end up at a certain spot if you're looking at the high time frames. And that's like a huge
Perfect.
advantage of that.
Right there. So on high time frames, you can identify, like I always say, look left, right? The reason we
Yes.
look left, people call it support and resistance, but really what you said earlier about like market makers, it's actually areas of liquidity that
Yeah.
the market goes back to trigger orders or to test the market sentiment, as they call it, right?
Exactly.
So
Yeah.
like if you just go like even today, what it's like February 10th or whatever, if you go look at the daily chart on pound yen, it ran for the last like week, but now it's up to like previous 4 months high, right?
Mm-hmm.
We're just sitting up there and
Oh
we're
yeah.
super overbought. So like, what do you think it's going to do?
That bad boy's coming down.
Sooner or
So
later, right?
yeah, it's all about like patience is one thing. Like that's like I know I probably said that earlier, but like patience is huge and it's key in this. Wait for the right moment. All right.
Right.
It could be the last 2 days, right? It could be the last 2 or 3 days, or maybe even the week of the month, right? But
Right.
once that thing comes, it's coming down, it's coming. And it's like an
Yeah.
avalanche and it will just
It's
fall.
like,
The price will short so hard and so fast. And if you know the right moment to get into that, you can really capitalize on that.
you can. That's what it's all about. You see that big move getting ready to happen. You just got to wait for that first little thing to just crank down and you can start taking all the moves all the rest of the way down on the lower time frames. Like I said, like
Absolutely,
I'm
man.
all about efficiency, so I like to do that like 1 hour workday thing, 2-3 hours max, right? I'm gonna like analyze for an hour, be in a trade for an hour and a half or so, do a little post trade analysis, see what else
Yeah,
is out there for me. Done. That's a 15-hour week.
exactly. I mean, that's the goal really of Forex.
Yeah.
Like, you spend a few hours, like spend a few hours a week doing the analysis. Like realistically, at the beginning of every single week, if you look at the day chart, right, or the 4 hour
Yeah.
chart, you can actually see what's going to happen the entire week.
You know what's gonna
You
happen.
already know. Like you already know what you're looking for. You do that once
Right.
at the beginning of the week. You spend a few hours doing that. It's Sunday night or Monday, whatever.
Yeah.
And then like, okay, I'm going to look for short trades on yen with anything with yen for the rest of the month.
Right. Totally. Same,
Like
and the other part is like when you pull out every day to the higher time frames, if you just come in and take a look, like there's always these periods of days and weeks and months. You're going to have a high, you're going to have a low, you're going to have a high of
right.
week and a low of week. And those are points of inflection. You have to make decisions about where you're going and what you're trading at that point. There also happens every day. You're going to have a high a day and a low a day. Is your low of day, right? Is it technically like oversold or overbought and running with your trend? Like, right?
Right.
So if you're like, oh, hey, this on the high time frames is longing, but I've got like at the low of day a nice double bottom here and I'm oversold. You should long with it, right? Because that's where it's going. That's the simple stuff, right? It's just like, but you got to get your head around it because it's like 3D chess at first. You know what I mean?
It totally is. Like it was really like the first. I remember the first time you showed me how to do it. I was like, "What the fuck am I looking at?" I'm looking at all these squiggly lines. Yeah, and then like once you really start to get it, it's like, I guess in this, to explain it in the simplest terms, right? What I do is I look for the extremes on the high time frames first.
Right.
Okay. Like overbought, oversold. What are we looking at here? Are there patterns or which way is the bias moving? And then once I figure that out, then I'm like, okay, now I'm just looking for the patterns to form on the short or the small time frames or the lower time frames. And then that's how I easily figure out what's going on and how to get these, how I do these trades all the time. It's like, that's the simplest way I think I can explain it without actually showing it.
Right. And you know, here's the deal. When you know what's happening on a high time frame, and I know this is like my turning point for people like, you know, members or like you or DeMark or like Thomas Savan, these guys, is when you see something happen, like maybe it's Friday coming into the next week, you know what to look for a day or two later.
Right.
That's the crystal ball effect, right? When you look at a high time frame, wait for it to happen on the low, get your sniper entry, right? Boom, that's it. It's just like, it's like a crystal ball.
I know, it's fantastic. It's like it really does. It just shows you the future. Like now, like, dude, I remember I used to be able to, like, I remember when I thought like, oh, like predicting price action 2 days in advance was a cool thing. Dude, now I can see like 4 weeks into the future. I'm like, yeah, it's gonna end up here. Just talk to me in a month. And they're like, well, how did you know that? I'm like, multiple time frame analysis.
Look at it, dude. Look at it. Awesome.
Dude, it's pretty wild, man.
When you are trading like a multiple time frame scenario, like, okay, let's just say, like, give you an example, right? It's like you're talking about like trading on like daily charts or like 4-hour chart. Are you looking like the extreme, like you just mentioned? Like, are you looking to the left? Are you looking for like previous, like, you know, there's an anchor point to the left and you're like a month later and you're still, guess what? It's probably going to reverse from there, right? If it's overbought or oversold.
Right. Exactly. Yeah. I'm looking. Yeah. So I'm definitely always looking at, I'm looking left to the support and resistance. I'm looking like weeks back. I'm looking to, because I want to see like on the 4-hour chart, like each one of those periods are 1 week. So I'm looking like at least a month and a half back, because sometimes it will, like, I know we talked about this gold trade. Remember that gold trade, dude? That took a month. Dude, that was like on the 4-hour chart. I waited and waited and waited for that thing and it shot for weeks. And then finally, like the last 2 or 3 days of the month, it formed that pattern on the day chart. And I was like, there it is.
That's it.
Yeah.
And then you entered on the hour chart and you were scaling in on the hour chart.
Dude, yeah, that was the best. Like that is how you maximize maximize the number of pips in using multiple time frame analysis. Because if you're using so if I'm looking, like, most of the time I'm looking at the weekday and 4 hours, my entry on currency now. So like now I'm looking at the week chart, like what's the week chart?
Holy crap.
Crazy, right? But I kind of like glance at that, like I'm just looking at the first couple candles, really, on like what they're doing, and then I'm down to the day. I'm like, all right, where's the day? And then usually the day, if it's got some it usually has some type of pattern on it, and then the 4 hours way clearer. And then like you got you might have a small one, and you sometimes I check the 1 hour just to be sure. And then once you can see it, sometimes if you zoom out, you can see that this large pattern form in the 1 hour chart. I'm like, there it is. That's what I've been waiting for. So it's pretty wild stuff, man.
You know what's so crazy is like people that were, you know, in Bitcoin after this last test at 69,000, that weekly chart was a perfect double top.
Dude, I love these crypto traders that are like, yeah, man, I'm like gonna buy the dip. I'm like, dude, like, first of all,
cash in at the top.
Let's not buy this dip right now, because I promise you that it hasn't reached the low yet.
Right.
And everyone buys the dip, and I'm like, they're like, oh, I lost money. I'm like, Told you. Like, dude, I was like, oh, like I told one crypto trader, like I'm in like a couple trading groups, and I told one crypto trader the other day, he's like, oh, I'm like looking at like buy this. So it was, I don't know if it was like a month ago. Everything's blurred together, but it was a while ago, and it was like it was like a perfect double bottom right off a 200 moving average. I was like, hey, you should buy that. He was like, he was like, no, I don't know if that's not the dip. I was like, I'm telling you, buy that. Dude, I think he made, I don't think he bought too much, but he ended up making like 10 or 12 grand on the trade.
Wow.
And I was like, yeah, dude, send me my cut to this Venmo address.
There you go.
Awesome, but yeah, dude, man. It's the same thing. Like, but it comes back to it. Crypto, stocks, anything. Multiple time frame analysis is gonna get you. It's gonna show you where your bias is going and what you're gonna do. This is why I think this particular tool, multiple time frame analysis, of the piece of knowledge, is one of the most important fundamental things that we use trading the market.
And I think too, if you like look at like a daily chart, for example, and like it just looks like it's just, man, this is just like choppy and weird. Like take your like tools and actually snap some lines on there. And as you go down to the hour chart or the 15-minute chart, you might be surprised at how awesome when you're range bound like that, you can just, as long as you got 100, 150 pips of movement, you can pick off the tops and the bottoms so easy.
Oh my God,
yeah, dude. Trades, dude.
Those are, I do enjoy an occasional range day, like when you just like, I'm gonna take a long. Oh, here we go. Yeah,
I love a range day. I love a good range.
Yeah, you can like really crush a lot of pips on it. It's pretty cool.
Crank a range off the top and the bottom.
Yeah, cranking out them ranges.
Crank the range. Night Ranger.
Yeah, so I mean, I guess that's, I don't know. Do you have anything else to add about?
No, I think it's just like, I think if you know how to pull out to those time frames and look for those areas of liquidity or support and resistance or whatever you want to call it, just look left. When you look left, look for divergence, like a retest with like a dropping moving or a dropping RSI or dropping indicators, whatever you're using, because usually when you have divergence, it's signaling that something's coming, right? Like
exactly.
Took out the previous high, but the indicators are dropping, or took out the previous low and the indicators are rising. Probably going to get a pretty aggressive move really quick. And if you know how to scale down into the lower time frames and find that shift bar, that confirmation bar off a pattern, you're going to rock it. No problem. Easy.
That's true.
Okay. Yeah. I shouldn't say it's easy. It just takes time. It
takes time to learn. But once, no, actually, dude, once you learn it, it is easy. Yeah. It's easy. It's super easy. Like once you know what you're looking for.
People got to get out of their own way and just listen and do it, right?
Dude, right. Like, that's it. That's really all it is.
That's like, the biggest part I've seen with traders that struggle is they can't get out of their own way, what they think. It's not about what you think. The market doesn't care about what you think.
No, it does not care what you think. I have plenty of experience with that. Right. I have, there was days, all right, I'll wrap it up with this because there were days I've been in a trade and it just like, I totally messed up the analysis and it just goes the wrong way. And I'm like yelling at the computer. I'm like, you don't give a fuck about me.
But I'm like you keep trying to enter the trade your way, thinking this time,
dude, like it's gonna do like no, like you can't gamble with this market, man. You need some
Don't
type.
Do that.
Yeah, 100%, man. Just another one of my long line of mistakes. Could write a book. But
hey, everybody that's listening to this, man. I mean, like if you're smart, reach out for Kyle. Learn from other people's mistakes. Like that's the oldest piece of advice, like Greek philosophy.
The oldest and best piece of advice.
Is he who learns from others' mistakes is smarter than the guy who made the original mistakes, right? Or
that is true.
Whatever the case is. And you can't Forex trading, it shouldn't be expensive to learn, and it shouldn't it's time. It just takes some time to build your knowledge and get confident and consistent over and over. Reps. Like bodybuilders, I always tell everybody this is bodybuilding, right? But it's brain. Like you see guys like DeMarc, man, or going to the gym and they're just shredded Adonis because they spend time in there doing reps.
Dude, it's right.
You got to do that like with your money.
Yeah, it's like anything. Like anybody, like guys that go to the gym or anything that took to get discipline, right? And like you can, if you have that level of discipline, just if you're trying to learn Forex, apply it to that. Apply it to this. Like, and I promise you will be successful. You'll shred in the market and you'll shred in the gym. So
yep, totally. Awesome, bro.
Super cool. All right, guys, please like and subscribe to the YouTube channel, Traveling Trader Pro. If you're listening on Spotify, give us a rating and follow us so you don't miss an episode. Also, you could follow me on Instagram at That's Mr. Doherty to you, and you can book a free strategy session with me if you need a coach at travelingtraderpro.com. Until next time, see you soon.
Cheers.